On the call this morning, Asian stocks remain in free fall, down over 2% today and over 6% over the last 3 sessions, despite the fact the Bank of Japan is intervening to weaken the yen and protect their exports. S&P futures are lower as car rental giant Avis Budget Group nearly doubles earnings estimates and Zipcar guides higher on full-year sales. As the economic recovery loses momentum, can these markets rebound ahead of what will be a very important jobs number on Friday, or the fact that the Fed might start a QE3 program early? I'm Scott Redler, and the morning call starts right now. Good morning, I'm Scott Redler, Chief Strategic Officer with T3Live.com, and welcome to today's morning call. It feels like a decade ago that we recommended going to macro cash as the fundamental news coming out of the U.S. has started to worsen. We started to technically get weaker when we were building this right shoulder of this head and shoulders top pattern, as well as getting dragged through the mud by what went on in Washington. But it wasn't a decade ago, a year ago. It was last week. This was last Thursday. Fast forward, we are a week later, we are almost 5% lower, and there's negativity everywhere, and rightly so. The economic landscape here is getting worse. People are starting to talk more about a double dip. Washington has been in a stalemate, throwing language around that is unacceptable to me as far as calling their own other party terrorists, but I won't even get into that. The fact of the matter is, yesterday the action was actually very interesting. We had a very key level in the S&P that a lot of technicians were watching. This was that 1249 area, which was the Japanese crisis low. Futures opened up. We talked about it. I mentioned to Alex what traders would like to see is some type of break of that level, an acceleration lower for a quick short, but see some type of reversal pattern to stop the selling pressure, to relieve some of the condition, because we've been down 8 days in a row. And that's what we saw yesterday. So if I show you the chart of the spiders, I'll show you right in front of you. Here you go. This is the chart, and this is what I'm talking about. This was the area that we mentioned to get to macro cash last Thursday on this show. Ever since then, a lot of down days, a lot of negativity. And then yesterday, finally, we had a bit of a reversal pattern. You had a level being broken, which was right here going across the neckline of this head and shoulders pattern. And then you had some stops triggered, some acceleration to the downside, but then finally you had a reversal back up. So as far as a trader, that was a great setup for the active cash flow guy looking for cash flow, because you saw them steal the stocks, you saw them trigger the stops, and then you saw the recovery. And then we closed on our highs. So now we come in today, the futures are down 8-9 handles, showing that we still have weakness. We couldn't even build upon a day one of an attempted rally, which really shows you that we're in a negative environment. So what I'm going to look at today is I'm going to look at yesterday's low, see for cash flow if we could buy versus that area, and then maybe go positive. But if we can't and we break yesterday's low, let me show you some levels we'll have to look at moving forward. That right now is, the low from yesterday was about 1234. Okay, then you have 1220, and then the measured move of this entire bearish pattern brings you to about 1180. Okay, that's from the head to the neckline is about 100 handles. So you take the measurement from the neckline down, that's about 1180. And if you look at the macro area, you will see that, granted, that feels like it's ugly. You think that that's a lot, but look where we came from. Okay, we're still only about 10% off the highs, and we've come almost 100% off the lows. So, if you think about this chart, this is all where we are. I think a lot of market participants are spoiled. They're used to QE2 that ended in July, thinking that there will always be the wizard behind the curtain buying up stocks at the end of the day, or putting in that support that's been gone, and we see a different market dynamic now. Now, yesterday, what led us up was the tech sector. They've been leading this market for the entire year. They've always been in front with high beta stocks. If you look at the Qs, you will see that they held higher. They didn't even break their 200-day. They held it yesterday. So if you look at the Qs here, you will see that this area has been a very good sector to look at, to turn to if we're going to get any kind of market move. If you look where the support was for the year, the Qs or tech have not even made it down to that area, so that's showing relative strength. We did pierce a 200-day moving average, and we we closed back above it, which is important. So for today, you have to see if yesterday's low holds. If it doesn't, next area we're going to look at in the Qs is 54. But what you could have seen earlier to get out was when this ascending channel broke to the downside. That was your technical clue to lighten up. And then on that same day, we went to macro cash in the S&Ps when we broke 1310. That was your confirmation that the momentum has left this arena.